Regardless of your age, whether you're 15 or 50 or 95, if you were paying attention, you probably noticed that in March of last year, 2020, we experienced one of the worst stock market corrections of our lifetime. Around this time, news articles began to flood the internet with breaking titles such as "This market crash is even crazier than 1929," "A stock market crash was coming, coronavirus was just the spark," and "This was the fastest 30% sell-off ever, exceeding the pace of declines during the Great Depression." Now, while a stock market crash this dramatic was unexpected to most of us, it really was just the first of many surprises that would end up coming our way over the next few months and year. This led us all to wonder, how volatile is the housing market, and is the housing market going to perform in a similar manner that the stock market did? Around this time, Google searches regarding the housing market became some of the most trending searches of the time. We were seeing tons of searches such as, will the housing market crash? Will it crash in 2022? Will it crash in 2023? Will the housing market ever go down? And in case you've been living under a rock for the last 2 years, no, the housing market did not go down. In fact, today we're still seeing some of the highest prices that we've seen in history in many areas all over the country. Due to a high demand and a low supply in many areas of the country, buyers are finding it harder and harder to get their offers accepted, and it's not uncommon for bidding wars to ensue over the listings that are on the market. So this leaves us with two questions that must be answered. What has occurred over the last 2 years that have caused housing prices to soar? And did COVID-19 have anything to do with it? Well, yes and no. And real quick before we get started, if you find the information in this video helpful, please consider taking a quick second to click the like button and hit subscribe so that you don't miss any future content just like this. All right, now that that's out of the way, let's talk about 5 reasons why housing prices are so high today. The first reason is probably the most obvious, and that's low interest rates. Mortgage rates that were already historically low plummeted even further, and lower interest rates encourage home buying, thus contributing to the increase in demand. Low rates mean less money paid to interest. Less money paid to interest means lower monthly payments, and most buyers realize that a lower monthly payment means that they can afford more house. And since mortgage lenders determine how much you can borrow by comparing your debt to your income, a lower monthly payment most likely means that you can afford more house. Last year, mortgage rates dropped due to the Federal Reserve lowering rates in response to COVID-19. In November of last year, the average 30-year fixed-rate mortgage reached record lows of 2.72%, with some buyers even getting lower than that. This is almost 1 full percent lower than interest rates compared to a year prior. In addition to all of this, not only buyers are taking advantage of the lower interest rates, but homeowners are as well by refinancing the loans that they currently have on their house. This allows them to replace their old loans with the higher interest rates with new loans at today's low interest rates, thus solidifying their intent to not sell and stay put in the home that they already own. All right, the next contributing factor is the utility of a home. Generally speaking, most people use their homes to pretty much eat, sleep, and spend leisure time. But what happens when schools, gyms, the place where you work, restaurants, and other public places close with COVID? Now all of a sudden there's an increase in the utility of a home because all of these things that people generally go out into public to do, they're now doing from home for an extended period of time. While the economy was shut down and there was an increase of people staying at home and doing things that they would generally go out to public places to do, most people wanted to scale up and get into a more comfortable living space, especially those who were renting small, densely populated areas like apartment buildings and things like that. And as you guessed, this is just one more thing that's causing more demand for houses. All right, now the third contributing factor is a pretty common theme in this video. If you couldn't tell, that's going to be low supply, low inventory, and a high demand for homes. Now this is really a basic supply and demand problem. There are too many interested buyers and not enough available homes right now, which pushes prices higher. Now, in terms of new builds, new home construction has begun to pick up, but builders really just can't keep up with the high demand right now. The National Association of Home Builders estimates that new homes are being constructed at a rate of 1.42 million per year, but unfortunately, this is not sufficient to address the current shortage. The pace of new home construction and existing home turnover means it'll take many months for the housing supply to reach a healthy level again. As a result, unfortunately, home buyers are unlikely to get relief from rising prices anytime soon. The inventory of homes for sale in January 2021 fell nearly 26% compared to 1 year prior in January of 2020. The National Association of Realtors also reports that all in all, we're about 3 million homes short, which is a lot to catch up on. Low supply really just means more competition, and more buyers are willing to pay more in order to get their offer accepted in bidding wars. In addition, sometimes they're even willing to waive their contingencies, which makes their offer that much more attractive. All right, so the fourth contributing factor is actually really interesting and one that we don't really hear too much about. This is the current demographics of the population within the US and how statistics show that this is likely another reason why demand will increase moving forward. Now, as you look at this chart, it's important to notice that the millennial generation is 26% larger than Generation X. Now, why is this important? Well, it needs to be taken into consideration that millennials are at the prime age right now where most people buy their first homes or start looking at homes more seriously. And to make matters worse, the generation that's the largest in our population right now, Gen Z, is following right behind millennials, and they too, a population of more than 4 million more than the millennials, will also be getting to a prime age in the near future where they begin to buy houses as well. And this is just another important factor to take into consideration that shows that demand is likely going to increase and isn't showing any signs of slowing down anytime soon. Now, this brings us to our fifth contributing factor, which we're not going to spend a lot of time on, but that's going to be high inflation and why high inflation is important. But don't worry. Having a mortgage and being a homeowner is arguably one of the best assets you can have during high inflationary times. Now, to illustrate this point, I'll give you an example. So to keep the number simple, let's assume that over a period of time, we have an inflation rate of 10%. So let's say that goods and services, for example, have increased at a rate of 10%. So that Snickers bar that you used to buy for $1 now costs $1.10. But your income has also increased by 10%. So you might say, well, it's a wash, right? Everything that I'm purchasing is 10% higher, but I'm also earning 10% higher, right? So it evens out. Well, not quite. Think about all the money that you have saved in your savings account. While everything else just got 10% more expensive, your money that you have in your savings account has not changed. Therefore, the money that you have saved has just been devalued by 10%. Well, what if you have a mortgage on a property? If your income has increased by 10%, that monthly expense that is your mortgage payment has not changed. Your income has increased, but your mortgage payment will always stay the same unless you refinance it or alter it in some way, which is not recommended during these times where we have ridiculously low interest rates. Because again, as the economy undergoes inflation, you're always locked into that same monthly payment for the entire term of that loan. All right, guys, so that's going to be it for today. I know that we covered a lot of topics here briefly, and really each of these subjects could be an entire video in themselves. So if I lost you anywhere or you need any clarification on different items that we went over, I would encourage you to write them down in the comments below and we can get into them a little bit deeper. As always, hope you guys found the information in this video helpful. And if you did, go ahead and click the like button, the subscribe button, share it with your mom, dad, cat, dog, anybody who's going to get good value out of it. And don't forget to stay educated, make good decisions, and we'll see you next time.